Hi, Niels. Thank you for joining us on Seize and Desist podcast. Really appreciate you taking the time out of your schedule to jump on and talk about all things related to liquidating seized digital assets.
Yeah, thank you very much for the invite, and I'm looking forward to the talk with you.
So it's not an easy topic to discuss, and I think to sort of set the scene a little bit. I mean, Asset Reality works with Tradias. We'll talk about what Tradias are and what Tradias do as our sort of preferred partner for all of our liquidations, and we'll explain why it's important to decouple custody and liquidation. And I'll keep talking a lot about my old background of the auction industry and this pressure to achieve best price market value. And we'll look at some of the comparables. But really, what we want to do is, I mean, again, the whole purpose of Seize and Desist podcast is to explore the seized asset ecosystem, to look at the steps, the stages, the processes that everything from seizure to management to liquidation. And I think that liquidation in crypto is seen as something that's incredibly complicated. But then when you drill down into any liquidation of any asset can be complicated if you don't know that world and it's not your world. I mean, selling shares or selling securities that are seized are complex financial instruments as well. So I thought it might be useful for us, Neil, to sort of to kick off, I think let's get started with a bit of sort of your background, Tradius's background, and how that sort of plugs in to the overall mothership. And then if we can maybe walk through, we'll go through a sort of a typical sort of user flow, and we'll unpack as we go to keep it as almost because I appreciate it can be a complex topic. So we'll try and keep it as almost as chronological as possible going through the stages. And then we have a ton of things that we can discuss about all of the pitfalls, the tips, the tricks, the things that we've seen. And I will keep interrupting you all the time to make you
Please.
explain it like a 5-year-old because I know this is such a big topic and so many people are just too nervous. Like we've all been to the conferences where people say, any questions? And nobody asks. And one person asks the question, and everyone goes, "Oh, thank goodness for that! I wanted to know that answer." So let's kick off with you, Niels. What got you into the seat that you're in today?
Yeah, so I'm Chief Revenue Officer. Sorry, Chief Growth Officer. I was Chief Revenue Officer at Tradias. Since March, I'm Chief Growth Officer at Tradias. I'm working here for almost 5 years now. I'm one of the first employees. And Tradias is a German BaFin and European MiCA regulated bank that provides institutional grade crypto rails for Europe's leading banks and brokers. So we enable these banks that their clients can trade cryptocurrencies. And yeah, we are enabling, as of today, over 14 million European retail clients to trade via this B2B2C rail. And in addition, we offer a dedicated liquidation service for government seized assets, where we want to focus on today, right? Maybe a little bit regarding our heritage. So originally, Tradias was the tech arm when we had no licenses at that time of a bankhaus called Bankhaus Scheich. So it's a market maker and liquidity provider for over 40 years in the traditional world. And what we basically tried to do at that time, like 5-6 years ago, we wanted to bring the infrastructure and the system from the traditional world into the crypto world, because at that time crypto really was like Wild West, a lot of exchanges, no KYC.
Some would say it still is in certain parts, but other parts are definitely better.
Yeah, but it definitely grew up.
Yeah.
And we are, as of today, one of the leading regulated players within Europe. And we just built this regulated setup that people can trade cryptocurrencies in a secure and compliant way, I would say. That's basically what we are doing. That's our main business. So we have a trading volume of over 2 billion euro per month, clients all over Europe. But our special service that we offer is the liquidation of seized assets for governments, for public authorities, for states, and we do this for almost 4 years now. And we service the majority of German federal states as well as other EU and non-EU governments. They are also already partners. We had over 100 transactions executed with a trading volume of over 3 billion euro. So we are quite experienced in that space, and that means we have seen a lot, which also means that I can share like some pitfalls, as you said, and some best practices. And I'm happy to give you more color and insights of what we are exactly doing and where are the problems and how you can solve these problems.
But look, again, as we said at the top of this call, I mean, for all of the reasons you've just listed, the reason that sort of asset reality works with Tradias, and not just being sort of complete disclosure. This isn't a sales pitch for asset reality or Tradias, but it is a big problem in the sector where folks like us who manage assets, we have to be able to find a network of partners who have the experience that that can navigate the challenges of seizing and managing things like digital assets. And as you've mentioned, there has been if you're a police officer involved in seizing assets, or a prosecutor, or someone involved in an asset management office, a lot of the things you have to do is basically build out that infrastructure. And I think for too long, people thought that managing seized assets was just a case of, no, get it, seize crypto, stick it on a ledger wallet, stick it on a hardware wallet, or spin up your own software wallet. And we've seen now this desire for better infrastructure, better reporting. But I think one of the areas that we keep coming back to that people don't fully understand, and it's a little bit of a sort of a black box sometimes, is the liquidation process. And for us, certainly as a company, one of the things we were looking for was having someone that had that, that DNA, that heritage that you mentioned, that was basically a bank that is now doing crypto. I mean, one of our very first deposit accounts for seized crypto was with Fidelity, for example, because we wanted old, slow moving, regulated, safe, that because that's how government agencies and public sector moves. We would rather move slowly and be accurate than do something quick and find, like, how can governments afford to have seize someone's assets for a criminal offense and then work with a partner that has also been prosecuted for a money laundering offense? And this is where there's been difficulties in the past and some huge embarrassments, because governments have worked with crypto companies, and those crypto companies have had their own problems. So going through that lens of sort of traditional financial regulated entity that is now involved in digital assets, you talked about liquidations. Everyone who is listening to this podcast will know about and will have heard the terms OTC trades, liquidating crypto assets. Can you give us the 10,000-foot view of the traditional sort of public sector seized crypto disposal flow? And let's just go through it at a high
Yeah.
level for now. We can dive in. But from Asset Reality's perspective, our job is to get those assets seized and managed and safe as quickly as possible. And if I think of the boats to Bitcoin sort of comparison we always use, if I seize a boat and I keep that boat in the marina and I keep it insured and inventoried and well looked after, when I then want to exit and I want to realize the value in that asset, and I have a freezing order that I maybe has now flipped to a forfeiture, or I've got the permission of the court to sell the asset, I wouldn't just give the boat to the storage provider and say, give me your best price. I mean, I'd be criticized for that. I would be expected to go onto the open market, and I'd be expected. And that's pretty much the role of an OTC and sort of liquidity sort of partner. And keep me right here, sort of like the auctioneer. You're getting these assets from companies like us to say, go get us the best price. And I know that
Exactly.
what's uniquely interesting to me about Germany, especially, and the reason we sort of chose that region, is because there's lots of additional regulatory guide rails that hold you to account, that hold us to account, that hold sort of everybody to account in the ecosystem. So if you could sort of walk us through that 10,000-foot view and some of those guide rails, I know people would find that really useful.
Yeah, absolutely. So there were like a lot of points where I would like to directly answer, but I think it makes sense to like do it in a structured way. So I would suggest like let's look at an example, or we do like kind of a case study now that walks us through that. Okay. So what is let's create a situation. What is the situation? So let's say there is a case that a state wants to sell cryptocurrencies worth 100 million euro across 40 different cryptocurrencies Bitcoin, ETH, several illiquid assets, Monero. Then we covered all relevant cases
We hit all the
here.
bases.
And yeah, and now what to do with it, right? So we are engaged to sell these cryptocurrencies, ranging from millions to billions of euros in value on behalf of government institutions. And if now someone comes up with that case, says here's 100 million in crypto and it's 40 different cryptocurrencies, what are we doing now, right? So first of all, we have to check what are the real problems here. Yeah. So first of all, especially in the past, but as you said, still today, most exchanges are unregulated or operate offshore and or are focused on retail volume. Yeah. So they are not able to sell like larger blocks, let's say. Plus, when you as a state send the cryptocurrencies to someone, you don't really want to send that upfront to an exchange, let's say that is located at BVI or Bahamas, and then you hope on the next day that you see like the amount of cryptos, then you sell it there, and then you hope that the next day you get the money back, right? So it's always more secure to do that with a regulated entity, and in the best case with a bank, right? With a regulated bank. So, and when this bank is regulated in Europe or within the EU, it's even better from a regulatory standpoint. Yeah. So that's the first problem or the first topic. Second topic, if you have very large blocks, especially of more illiquid coins, you cannot like say, okay, I'm going to create an account on an exchange and I'm going to do it by myself now. Yeah. And just sell it via exchanges, because then you will have a market impact and you have a compliance risk. Yeah. It's
So
highly like
for those that don't know, give us what is a practical example of an illiquid asset? What do you mean when you say that in relation to
coin
crypto?
number 170.
Yeah, exactly. So a random crypto that isn't
Yeah.
one of the big
So
cryptos that's
what,
traded.
what you see in the market, especially when the market is crashing, you see that very well. We had it couple of Fridays ago. Yeah.
Right.
You see that there is not even enough liquidity in Bitcoin and ETH from the market makers. Prices are collapsing. But if you go to the third to eighth, tenth asset, it's getting dramatically less liquid. And then after the top 10,
Yeah.
it's really getting illiquid. And in special situations, you see that there's no real depth in the market. Yeah.
And especially if you're dropping a large proportionate amount of that seized asset as well, you genuinely can impact the market as well.
Yeah, that which is a huge problem because you are forced to sell these cryptocurrencies in a market-friendly way, right? So it's not so easy. So if you have like 100 euro worth ETH, yes, you could do it from a volume perspective, but the ticket sizes we see and they will grow in the future because they will find and seize more. This is definitely a critical topic. So another problem to date, so we liquidated now over, I think, 90 or 100 different cryptocurrencies, yeah, that were involved across similar mandates. Most providers only offer a fraction of the required coins against fiat. So your attorney must have like 10 exchange accounts to handle and manage that, and he doesn't have time for that, right? Another point, and in my opinion, this is the most important point, and this was really, really underestimated in the past. Many assets that you seize, they are used in illicit activities. So they are flagged as tainted and are not readily reintroducible to the market in that form. So
Yeah,
there are a lot of
they'll just be rejected by the compliance department where you try and send them to.
yeah, there are a lot of players like Chainalysis, CoinFirm, Elliptic, Luca, etc., who are doing nothing else than 24 hours on-chain analysis of what's happening on the blockchain. And they know when these wallet addresses come from the darknet, right? So you are not able to just sell them on an exchange because they would just freeze your account and you can't do anything. So you need
And you think virtually all government seized assets, by the virtue of their being seized, the vast majority of cases that we see when we seize assets, they will light up red on most of the analytics screening tools. That's why they
absolutely,
that's why they were seized.
yeah, I mean, there are drug dealer cases,
Yeah.
etc. They will not be flagged then, but the majority of addresses is definitely tainted and flagged as tainted. So that means you need a process to whitelist or clean these addresses, yeah? And the last problem you have, especially with private-focused assets like Monero, you will not find a normal way to just liquidate them and sell them because it's forbidden on most of the exchanges, yeah? So this is just like a wrap-up of problems that you are facing when you are trying to sell cryptocurrencies in that with that size, with that volume, and in that amount of different currencies, yeah? How do you solve these problems? And this is how we solve these problems. So your first thinking should be, okay, I have to implement an end-to-end regulated process for selling seized cryptocurrencies from criminal activities that is secure, compliant, interest preserving. This is the price you were talking about because you want to get the maximum out of it for the taxpayer, has low impact on the market or no impact on the market, and is market conform, right? These are the points where you really have to make sure that your process focuses on these topics, yeah? And the first thing is you have to apply a whitelisting or remediation workflow to decontaminate these coins, enabling to bring them back to the market and get fiat money for it, right? So you need a trusted, regulated partner who can handle these amount of different coins, large volumes, and who has a comprehensive network to inform the market that you control these coins and that these coins are now ready to go back to the market because they are not owned by the criminals anymore. Yeah, and this is like the whole value chain that we can provide for your clients, for our clients, because our main business, like doing like all the liquidity provision for the traditional banks, gives us a huge trading volume. That means, as I said, we have over 2 billion euro trading volume per month. We are connected with over 40 different liquidity providers worldwide. So when you get a price from us, we made sure we checked over 40 different exchanges, OTC platforms, other players
So it's
that
not
make sure.
it's not Tradias buying the asset.
No, it's not. No, absolutely not. So what's not happening is that we do a portfolio deal where we say, okay, you give us the assets with a 20% haircut and we try to sell it. This is not this is a case, for example, for insolvency cases where you can do that, especially when you have a lot of shit coins, so-called like illiquid coins. But this is exactly not what's happening. You sell the coins against us and we spread the liquidity into the market, but not with a haircut. We then provide, like, you have to think about it like, I mean, we have a trading desk with a lot of people trading here 24/7, and our trading desk gets the job. You have to sell the coins for this state in their best interest. It's called interest preserving order, coming from the traditional world. And then these guys are 100% focused on your ticket, trying to get the maximum out of it. And in the end, we prove and confirm that they have done a good job, right? So this is basically how the process, or how we try to solve these problems, right? Plus we we are one of the really few players in the world who can do that. We invented a process that we are able to whitelist these coins. Yeah. Not everyone can do that because you need to be like a trusted party. So it's helpful to be a German regulated bank.
Yeah,
And then
not any random analytic company is going to be, or sorry, not any random provider is going to be able to talk to an analytic company and say, take what we're saying seriously.
exactly. Plus, you have to make sure that you cover 100% of that market of AML on-screen analysis providers, because we cannot allow ourselves to have gaps in that system. Because when we say the coins are clean and we like sell it via OTC players or like over exchanges, etc., we need to make sure that the future owner of these coins won't have a problem with these coins, right? And that's also very important for us to make that sure that no one has like a problem afterwards.
Yeah, because we see that in the world of physical assets. You know, when a boat is sold or a painting is sold that has been a previous proceeds of crime asset. I've seen it before where mega yacht is sold at auction, for example. It goes to a different harbor, and because the records or the VAT status, they don't have the right paperwork, and when they bought it in a different jurisdiction, they run into issues. The same
Perfect
happens
example.
when large heavy goods vehicles are seized in one country and then they enter the UK, for example, and they're smuggling illegal immigrants unknowingly to the company. Once those vessels are seized, impounded, and resold on the open market, you find that one database in one country is updated, that it's now being processed out the other side. But another may have the original alert from years before, and it pings at a port or it pings at a border crossing. And the same is happening with crypto. So just to recap to keep people with us for those that haven't sort of been involved in these processes. So let's imagine then, so someone is working with asset reality. We're helping them with the seizure part. They get the assets seized. We get the assets into safe custody. They sit on the assets for a couple of years. It goes through the court process. They get their forfeiture order. They come back to asset reality and they say, go and sell our assets, please. What's happening on the back end then is asset reality is communicating with you guys and saying, right, do your thing. Please go off and get the best price that we can get for these assets. You're not doing what some exchanges do, which is basically just buying the assets as you mentioned, which is the same as, again, if you went into one auction or you went into an art gallery and said, give me the price for this painting today, and you sold it to them. That's not the same as going to 40 galleries and getting the best price. And I think people will understand that there will be times when it is absolutely okay to do those sorts of things when you have something like an insolvency situation where you have incredibly unattractive portfolios of assets. I've been the auctioneer. I've had items that we've tried to sell them at auction. We can't get anywhere near the open market value, and you end up doing a sort of discounted trade sale. But we can go back to the court and we can prove the process has been followed. I know we spoke before, but it'd be useful for people to know about what are the regulatory guide rails are in place. I know that recently we had a very small, and I love the fact that we can talk about billions, but also a lot of the cases we deal with are also very, very small amounts that are being
Yeah.
processed. Court. I remember the guys telling me that we had a market conformity sort of report that was done on a tiny, tiny transaction. But what does that look like? And is that a regulatory requirement unique to Germany?
No, this is uh, let's say this is not a regulatory requirement. This
Okay.
is just how we prove best execution,
Oh, excellent.
right?
I didn't actually know that. That's great. Yeah.
So that's this is, I would say, again, this is our heritage. This was a standard from the traditional world. And before anybody talked about it, and before Mika was in place, we already gold standarded it into crypto and used this vehicle to guarantee that our partner is like treated fair and that he gets most out of the value, right?
So in
Um,
this instance, let's use that example. In this instance, Asset Reality is your partner. We've got seized government assets. We go to you and say,
Yeah,
hey,
I can guide you through the process.
walk us.
Absolutely. So let's say we get an email and you say, I want to sell, I need to sell 40 different
Yep,
cryptocurrencies, 100 million. Let's take the old example we had. Okay.
yep.
Then I say, okay, please provide the addresses. Then you provide special documents that we cannot share here publicly for sure, with like security layers, etc. There's a process that I cannot talk about publicly now, but there
But
is
it,
an easy
it
process.
validates their legitimate seized assets. Yeah.
You provide documentation, then I'm going to do the whitelisting process that takes normally like around 24 hours. And after that, after the whitelisting process is done, we will transfer the coins in a two-factor authentication and 4i principle in a video call so you will trade them then to, or send them to, transfer them to Tradias. Then we immediately start with the liquidation. And the next day, when the liquidation is done, for sure not for a 2 billion ticket, but for smaller tickets, we can do it within one day, right? Then you get a trade confirmation and you get a market conformity report. And there you can see, okay, this is what the trading desk could do best for me, and it's in line with the parameters of the market, right? And then last step, we transfer the fiat money to the bank accounts of the government or public authority. So that's basically the process. And all in all, it takes like, let's say 2 to 3 days, realistically.
So that market conformity is basically giving me the evidence that if I have to go back as the asset manager and the government says, today on the ETH you achieved, 940,000 euros today. The point of that report is to show an evidence at that moment in time, the range across the market.
It's
Do
two
you want to
things.
explain that?
It's two things. It's one is the price, but one is that we didn't move the price. So it's also looking at the volume that we moved and the total volume of the market. That's also very important, right? So
Yeah,
it reflects all relevant topics.
yeah, but and for those that don't know, it's worth sort of just doubling down on that. So that's to set the if someone then says you've moved the market, well, if you sold 100 ETH at a day when tens of thousands of ETH is trading, that's not going to cause a ripple. But if you
Plus, yeah, right. On the one hand, yes, right. But on the other hand, I would say over 90% of our trades we are doing are off exchange, so-called OTC, over the counter. That means it's not going to an exchange. Maybe to explain that to the
please.
listeners, when you have an exchange, there are bids and asks. So you got someone wants to sell and someone wants to buy, right? And now when you come up with a large order, you are filling the I want to sell side. And that means that the price is going down. Then you move the price. When you do an OTC trade off exchange, you confirm a price with someone else and the coins are not hitting any exchange. And by the way, no one sees that price in the market at that time,
Because
right?
there's no movement on chain for anyone to track.
Exactly. And that means that when you do these larger ticket sizes, you do not move, you cannot influence the price because there is no mechanism
Or
that
crypto
lets
Twitter.
price go down. Yeah.
Because that is such a unique problem with digital assets. If I'm selling a boat or a gold bar, or a property or real estate, no one will know that I've received 14 bids, locked in a price, and I'm going through conveyancing. But one of the unique problems with crypto that I was literally talking about on
It's not a
stage.
problem. It's a feature.
It's a feature. It's people. It's people. Well, it's a problem when people are mistakenly preempting. Oh, the government have moved assets, therefore there
We
must be
come to that
liquidation
later. Yeah.
happening. Yeah, yeah. But it is such a unique thing. I mean, you don't know when the government's moving gold bullion around, but everyone can see anything. But yeah, sorry, I'll not interrupt you.
Only if you make it public in advance. But
Mhm.
I think this is part of the field tested tips and pitfalls to avoid later in the
Go for it.
conversation. Yeah. So basically, there are not so many things that you have to have an eye on, I would say, when you have trusted partners that you work together that are experienced. I would say the first important thing is really treat whitelisting as a non-negotiable. Yeah, this is something in the past where no one cared about, or almost no one cared about. I know cases, I know examples where in the really early days of crypto, a state tried to sell Bitcoin via an auction. Yeah. Which is not a good idea because you have a 24/7 very liquid priced product. So you don't need with a painting there. It makes sense to find the price. With a hyper liquid product, doesn't make sense. But the law said you have to do it via an auction, so they did it via an auction. Then they sent the private key to the winner of the auction. By the way, the price was already 10% down because it took so long. And then the buyer wanted to immediately sell that Bitcoin and uploaded it on an exchange. Their bank account, the exchange account was frozen, and a couple of hours later, the police was standing in front of his door because they thought he was the last one from that fraud case. Yeah.
Oh, wow.
So to avoid this, and that sounds funny, but it's a serious
Oh, it's
issue.
awful. Yeah.
So to avoid that, really treat whitelisting as non-negotiable, and it makes sense to run this process with professionals who really have that network, that trust in the market, who can do that. Second thing, as you already mentioned, when should you go public about a seizure or a subsequent liquidation? as you said, and this is a very important point for everyone who is listening to that podcast and is not so familiar with Bitcoin or with blockchain. When I give you $100, you give it to someone else and he give it to someone else. No one knows it. On the blockchain is not anonymous, it's pseudonymous. So you see all movements, right? And when you publish that you have seized like large amounts of crypto and also from where you seized it, yeah, it's highly likely that intelligence companies like Arkham or Chainalysis know that these addresses are connected to these cases, and then they can claim it as you own them. So the moment we start moving these assets can like start a panic in the market, right? I mean, I would say what happened 1 year ago with the case you were mentioning with the 50,000 Bitcoins, this won't happen anymore because at that time no one knew that they were working together with professionals and the whole market conditions were bad. FTX was like FTX coins were sold, there were more sellings from the USA, the sentiment was negative, but there was like a panic in the market when these coins started to move without a reason, because 50,000 Bitcoins is not that much. If you treat them well, if you treat them right, if you not dump them on an exchange. But the Twitter and LinkedIn community was like, and Reddit community was freaking out. They thought they would like, they literally thought someone is sitting there and now pressing the sell button for like, give me the best price, right?
Yeah.
This is what did not happen. So when the price was dropping 10% of the market, we didn't even sell 2% of the total amount of cryptocurrencies, right? So it was really like the market and the panic. And then the market, as soon as they have seen, oh, these coins are going to OTC players like Flow Traders, Jane Street, B2C2. You could see that publicly, so I can say that. You can see it on Arkham, yeah. At that moment, they realized, oh, damn it, there are professionals working, and the price went like back 15%. And then we were able to sell the rest for a very good price for the state and for like in a market friendly way without moving the markets, right? So going public is definitely a topic. You should talk about it after you liquidated something to make sure that no one can connect the dots that these coins are owned by you. Yeah, that definitely makes sense. Another thing you should think about is prevent transaction errors. So people, or like especially the police departments who normally like hold these coins, if they are not working together with Asset Reality, they are not very familiar with like handling these transactions. So I have seen like copy paste errors from PDFs, because when you have a scanned document, a PDF reader says a 1 is an L, right? With Bitcoin, that's no problem because they just say the address does not exist. But with Ethereum, the coins will be sent to Nirvana, to an address where no one has the private key, and the fundings are gone, the money is gone, right? So do not skip test transfers. Test transfers is very important. You need don't bypass the 4 eyes principle, right? These are things that are very important if you have to handle it yourself. But to be honest, if you do it on a larger scale, and everyone will do it in a larger scale in the future, it's the best idea to really do it with professionals and with a professional partner that can also is licensed, yeah, and can also like and is supervised by authorities, and who can really handle these cryptocurrencies also as a custodian, right? Because when you transfer stuff to us, this does not happen, right?
Exactly, and we all have our regulatory top cover in the sense.
Absolutely, and but for beginners, if you are not yet connected to a professional, maybe because the size is so small or whatever, really look out for PDFs, look out for test transfers, 4 eye principle. Just try to avoid losing money, right? And there we can give guidance. And another question, also very interesting, I have seen that in the past. Have we truly secured and accounted for everything? So what does that mean? I had a case where I had to liquidate, I think it was around 15,000 euros in ETH. And I was checking on the addresses, and like there were like a lot of other smaller illiquid coins, like with 100 euro, 20 euro, 80 euro. But it looked like this address looked like, okay, this was owned by someone more sophisticated in crypto. So I was checking the addresses in OpenSea, and you won't believe it, but we found like several apes. And on that way, we could secure another 6-digit amount of euros
Wow.
for that
And,
client, and that
for those,
client had no clue that these were existing. How should he know it, right?
yeah.
So this is also something, or a good argument why to work together with professionals like you guys or like us, that you really find everything on that
Yeah,
address.
for those that don't know, apes are the NFTs, the digital artwork, and it is, yeah, it is a very common thing. And just to go back on the point you were making around that, there will also be governments that know when before we existed, before you guys existed, there was governments seizing crypto, and they had to use whatever they could get their hands on in
Yeah,
2015, 2016, and some of those cases, because they take so long, we're aware that there's some of the agencies that we work with are sitting on seizures from 2018, and that's where people see these astronomical figures where it's $1 billion liquidation, but at the time it was millions that were seized, or similarly it's millions today, and at the time it was hundreds of thousands seized. So the risk profile when they did the seizure was absolutely reasonable. They had a safe that had $100,000 in cash. They had gold bars. So having $100,000 worth of crypto wasn't really seen as a big issue. But
absolutely.
we've never had an asset category in history that has gone from being worth 100,000 to 1 million to 10 million in years, just a couple of short years. And that's where we think a lot of people are being caught out at high risk. And often one of the most valuable roles that I think we play, and certainly you play, is even just the guidance, just being able to be on a call with someone as they're doing the transfer from their ecosystem to our ecosystem. Because most people won't know the point you've made about the Ethereum addresses. Most people just traditionally who have done the basic blockchain training will just assume if I get it wrong, the transaction will be rejected. I don't really have to worry about the miskeying. It as in it won't be the worst thing in the world. But I don't think people realize that it actually could be sent. And we've seen that. And then we could talk for days about address poisoning and all of the other scams that can affect
But
people.
but a very important point, what you just said, how people had to handle that in 2015, 2016, 2017. Aidan, we are still early. We are still
I,
very, very early. It's totally rudimentary. And the problem for, I mean, for example, the Saxony case, everyone was crying, why don't they hold the Bitcoins? Why did they sell it for that price? They should have held it like 1 year later. Or they said, what are they? So what I want to say is we have a regulatory topic. There's still a lot of improvement needed that the regulation matches with these problems, with these liquidation process, with these seizure processes. So just two
because
examples.
these are asset forfeiture processes which have nothing to do with regulation in a good way. The regulators don't dictate when the assets get sold, for
No,
example.
absolutely, absolutely. So, and there is a law in place, at least in Germany, that says when you get these assets, you have to like sell them in best way.
Mhm.
But if it's a highly volatile asset, you have to do it directly. So if
Absolutely.
there's no if there's no call from the president that says, okay, we now want to have a Bitcoin reserve, you cannot just store that, right? You have to liquidate it, and you have to liquidate it immediately. So there's no room for play. And I think there is a lot of potential in the future for the states. As you said, when you seize assets, yeah, there are cases where you directly have to liquidate, but there are also cases where these assets are like staying in custody for 2, 3, 4, 5 years, right? Until the case is closed. And what are you doing with these assets? I mean, just to come up with some ideas, ETH and Solana, for example, you could stake in a quiet, safe way. So you could try to generate yield to maximize the taxpayer outcome in the end. Or what we just discussed, when you have stable coins, you could invest that in a tokenized money market fund, for example, from BlackRock, that is like rock solid, 100%, almost 100% secure, and try to earn yield there. But this is all coming up like in the next months and years, and we need a lot
Yeah,
of regulation and rules there that helps the people to really like handle stuff well. And I have to say, like the public authorities, they really did a great job over the last years because they had almost no help. They didn't know what to do. And they really came proactively, for example, to us and said, we need to find a process for that. And that's a real rare example, at least in Germany, where the public sector and the private sector works together. And a huge shout out to everyone who had to handle that without any rules or knowledge. And I think they did a tremendous job.
I couldn't agree more. And one of the most frustrating things I see is, ill-informed or uneducated criticism when people don't actually know the facts. And it's something, I mean, we see ourselves as Asset Reality as the front end for seizures, and you guys are very much part of that, that engine room, because it's not in your interest to deal with 30,000 law enforcement agencies around the world and deal with evidential matters and return of assets to suspects. But similarly, we're not in the field of a regulated entity liquidating assets, because we're not a bank or a financial institution. So I think the marriage works well. I agree with you, and it was something I've talked about at length over the last couple of months, is that there is a fundamental requirement in understanding how asset forfeiture works and the different models in different countries. And what you hinted at is what happens in the Netherlands, it's what happens in some countries in Caribbean. If we look at the UK guidance, it's the direction of travel the UK is heading into with the latest Home Office guidance, which is converting to a stable equivalent any asset that is volatile or depreciating. So some governments around the world specifically list virtual assets, virtual currency. Others will leave it to the discretion of the court to say if it's deemed to be volatile. So as you've highlighted, but just to clarify it for the purposes of the podcast, in some countries, there is no choice, like you said, unless the law is actually changed and the law dictates there will be some sort of stockpile reserve. These assets, if they're seized on the 1st of December and the law is within 90 days, you will convert these assets. Unless the suspect makes an application or the accused, these digital assets will be converted. It's not the government deciding we're just not going to huddle and we're going to sell it for the sake of it. It's just the law and the process that they have to follow. And many people forget that seized means that the title hasn't changed yet. It doesn't belong to the government. Now, I think separately, the part you touched on, which I'm really excited about, is the future of asset management. And I would say it's probably closer than you think, in the sense of I don't need the law to change to take a seized horse and put that horse in a race to maintain its stud value. I don't have to change the law. I'm allowed under the freezing order to do whatever action is necessary to preserve the value. I think what you're talking about, I think there's just more education on risk, that if we present to a government agency, and a shout out to the French Asset Management Office, Agrask. I think Agrask was one of the first globally, and if I'm wrong, someone can correct me in the comments, but I think they were one of the first globally to actually get paid off interest on within bank accounts that are frozen over a certain amount. Now, I can see government agencies starting to look at large digital asset portfolios and thinking, if we put the real estate to work by renting the properties out, if we put the vessel to work, if we put the horse to work, why aren't we putting the digital assets to work and generating? It's the equivalent of taking all the money out of the bank and just keeping cash in a safe.
100%.
So I do think it will come. I do think it will come quicker than people think. And I think in
Yeah.
2025, we'll see some governments. I know that some of Asset Reality's government partners are doing small scale pilots. And I think the point you made at the very beginning of the podcast, the insolvency sector tends to have more bandwidth because receivers and insolvency practitioners acting on behalf of creditors can make more unilateral decisions. So I think we're seeing anyway of our client base, insolvency practitioners are the ones saying, I have to do something with this portfolio. I can't just let it sit. So I want to use tokenization of a real world asset and earn some, earn some money on these assets that are sitting still. So I think it will come, but it sits neatly, as you said. It's an asset management consideration, which is really interesting. It's not specific to crypto. It's just about effective asset management.
So I couldn't agree more. And as what you said, 100% right, it will come faster than you think. And for especially for our audience, for your core clients, I mean, to zoom out a little bit, right? It's not only the custody of seized assets, it's not only the liquidation of seized assets. We talk about ransomware cases. We talk about insolvency cases. We talk about payment solutions when you send money as a state to other countries, for example, yeah, that you don't lose like 20, 30, 40% until the money is there where people need help, right? We talk about yield generation you were just discussing. We were talking about strategic reserves. So the touch points for the police, for the judges, for the public authorities, for everyone with blockchain, it will be more and more and more and more. And these were just a few examples I was just claiming and naming. And it's really important that people are well educated and that they don't have a fear. Yeah, there are people, there are professionals who can help, who can educate, and these topics will definitely come. It's, in my opinion, it's unstoppable because people use crypto. You cannot like shut down the Bitcoin. People will most of the time use it in a good way, but also use it in a bad way for ransom,
Yeah,
for like
but just like
black
fiat,
markets, yeah, like
yeah,
fiat,
just like
like fiat. But what I've heard from a German attorney, they love crypto because it's way easier traceable than fiat. So in the end, it's a good thing. So the topic is a hot topic. We are still at the beginning. There is way more to come, and yeah. The world will change fast and quick, and we try to help there wherever we can.
I think it's a crazy statistic that I sort of calculated on the back of a napkin a couple of months ago that I mean, if we think about the entire asset recovery ecosystem and all of the seized assets in the world and all of the amounts that governments return each year in seized assets, I mean, all of the real estate, all the bank accounts, all the stocks and shares and financial instruments, boats, cars, everything. I mean, digital assets by I think something like more than 10 to 1 or 50 to 1, it's an astonishingly large number, has already eclipsed that. So there's already tens of billions of seized crypto around the world. There isn't tens of billions in regular assets and non-digital assets. So we are in a completely new world order where we have now, as you say, this. I think one of the speakers at Digital Asset Summit, and when I think about those events that you now have, like the JP Morgans, the BlackRocks, these enormous entities that in the past weren't going to get involved in crypto and are now very much crypto. One of them said, I thought very well, was, crypto is finance. There isn't, this is just a new update of the financial market. There isn't going to be that separation. It's going to become more and more invisible. But as you've said, the only way, the days of trying to figure it out on your own, I think, are laden with risk. But now that the new FATF focus on asset recovery, combined with the fact that digital assets have taken over seized assets as the largest category, what I'm excited about is the upside, is that there is, I think your point that the German regulator made, if criminals keep using crypto assets as the most traceable asset in the world, the issue is we don't have enough resources in detection and training and tools. And let's also remember 2025, it's probably still less than 10% on the back of a napkin, probably even less than 5% of agencies that have actually seized digital assets. We just have some limited agencies have done very large seizures, which makes it look like the global community is busy. The vast majority of tax authorities in the world have yet to seize crypto. The vast majority of state and local agencies globally have yet to seize crypto, like haven't done their first case. So I think we are at that super, super early point. But with that in mind, for those entities that are starting off, for those entities that are doing their first seizure, working with asset reality, they've got some assets seized, assets managed. If you were brought in and said, right, give me a presentation today, Nils. Tell me some of the tips, tricks, things to avoid, things that you see, things that you would tell people if you could turn back the clock, don't do that thing. Are there things that you've just seen over the last couple of years, or what do you find yourself commonly sort of telling people when you're asked to discuss this topic?
Yeah, to be honest, I think I already stated or came up with these examples
Yeah,
in the couple of in the last like 10-15 minutes. It was like the
we covered everything.
whitelisting, it was the copy paste mistakes, the
Yeah.
4i principle, the test transfers. Yeah, these are the common mistakes that you can make, and yeah, just I would say. Just take it very serious, but it's a topic that you can handle very well, and you can really like use it in your advantage, right? And yeah, there we are more than happy to help.
Wonderful. Well, look, I'm conscious of our time. We're coming up on nearly an hour now. I think it's something we could talk about for a very long time. And also, we haven't even hit on the issue of what we're seeing now in terms of like operational security around kidnap and ransom. We've seen some of those. No, I think one of the biggest topics we haven't really discussed is just you don't want to be managing billions of dollars of assets from an operational security standpoint. We're seeing more and more sort of threats where we have government agencies from everything from corruption challenges through to actual attacks and threat to life because the crypto guy or the person that controls wallets. So I think in addition to all of the upside that we mentioned, there is some serious sort of downside to people interacting with this space without having the regulatory or just experience to realize how much it can bite them.
I
Um,
think you have to, I think you just have to invite me again.
exactly. We'll have to do a follow up this time next year. Well, look, I know I'm looking forward to your talk. I know you'll be speaking by the time this podcast goes out. You'll be speaking at the nine CRC, the big UNODC event around crypto assets. So I look forward to seeing you in person. And thank you very much again for your time, Nils.
It was a pleasure. Thank you very much.
Our podcasts are for informational purposes only. They are not intended to provide legal, tax, financial, and/or investment advice. Listeners must consult their own advisors before making any decisions on the topics being discussed.